Have with us Dinshaw Irani joining us to talk to us about where do we go from here on, because the last time we hit the mark of 19,991, we retraced, there was a long consolidation. But what about this time, Dinshaw? Do things look different this time around?
No, so basically, I remember when it crossed 19,000, you guys had me on the show, and I told you that this is just one of the milestones that you'll see the Nifty achieving. In fact, our feel is that the Nifty is going to have a one side. I mean, there'll be obviously volatility, but our feel is that the Nifty is poised to break records every year from now on onwards. You'll see new highs, and I suggest that you stop calling people after every 1,000 points. You have to call them after every 5,000 points now. So that's our feel.
For an excuse to talk to you, Dinshaw, perhaps, because we'd love to get more insights from you. But
sorry,
Dinshaw...
Sorry,
I just wanted to get your sense on mid-cap specifically as well, because that is where I think there's a lot of problem area for the fund managers like yourself as to where to deploy the money.
Yeah, actually you're right, because the problem with the mid-cap is that there's only 150 stocks in the mid-cap as identified by MK. So now so much of money flowing into these 150 stocks will obviously there'll be a level where you finally say that, okay, I don't want to invest at these prices and these valuations. So they look pretty stressed. But in the case of at least small caps, you have anything beyond 250 stocks is small caps, right? So you have enough and more to choose from. So that's not a problem area, but you're right about the 150 bit, the mid-cap bit, where there will be an issue. And that's why we believe, in fact, we've been doing that in our portfolio at least, trimming out names where you think the valuations have reached limit levels.
Dinshaw, so if we have to talk to you next when the Nifty hits 25,000, because you want to talk to us after every 5,000 points, tell me what's going to be the picture like and what's going to be the contributor from here onwards?
So basically, our feel is that the way our index is, at least that's what we believe, that if you're looking at a nominal GDP of 11% growth in the next 4-5 years, you're talking about index at least giving you a return of 14 plus kind of percent over the next 4-5 years. So you can very well do the math out here that every year you'll see roughly around another 3,000 points being added to the Nifty percent. You're talking about a 14% kind of growth as such. So that's what my call was, that our feel is that our valuations are at limits. As in you're at 18.5 times 1 year forward earnings, which is very much in line with your last 7 odd years. I'm basically talking about the post-COVID kind of, post-demon kind of period. That's when really the equity culture caught on as such. So I don't see our markets getting stretched at all at these levels also.
High levels will just keep on coming. That's the word coming in. But Dinshaw, is it time now to probably book some profits from the railways, the PSUs, the power stocks? Because it's giving a lot of us anxiety as to why these stocks are running. Until when?
Actually, right, because our feel also was the same, that wherever you see a froth happening, and obviously the ones that you mentioned, there seems to be a lot of froth, more of money chasing limit in a lot of stocks that is really working out here. But at least in the large cap space, I don't think the market has rallied as much as we would want it to, given that the small and mid caps have rallied around 35 odd percent, 35, 36%. I think the indexes are up over the year, and while the large cap is not up so much. So obviously there will be pockets where you need to book out, and there will be enough opportunities and more in the market to get into newer names where you think the valuations are reasonable.
Nilesh Shah as well joins in on the show right now. Nilesh, hi, afternoon, and welcome to the 20K party. We've got Dinshaw Irani as well from Helios, and he says that, we should stop making all this hue and cry about 20,000 and not talk to us after every 1,000 point, but next 5,000 points. So he's quite convinced that it's going to be 25K also on the Nifty soon. But tell me, in the near term, Nilesh, do you get the sense that maybe we're getting a little frothy, at least in pockets?
Undoubtedly. There are, as you go down the market capitalization, clearly stocks, instead of becoming cheaper, are becoming expensive. The micro cap, mini caps today trade at higher valuation than large cap. The SME exchange trades at higher valuation than large cap. These are typically the signs where one needs to exercise caution. if the risk-reward ratio I have to see, I'll say they are better towards larger cap companies than towards lower cap companies.
Okay, so that's the take coming in, Nilesh, as far as the market is concerned. But is it fair to say that the banking stocks, the hiatus and the underperformance is likely to get over now? The ICRR is out of the window, inflation is under control. Good news coming in for the banking stocks and private PSUs alike?
I think there will be a catch-up game in banking stock. Today, they are suffering underperformance because of over-ownership. Most of the institutional investors had large exposure over there, and some of the retail HNI might would have started booking profit from banking stock to go into other momentum stock. But this has widened the valuation gap. This has created far better risk-reward ratio in banking sector compared to, let's say, other momentum stocks. So some sane capital, sane money will start getting relocated from lower cap stocks towards banking sector.
Banking sector catch-up is likely to play out. But talking about catch-up, Dinshaw, do you think there is a chance for IT to catch up as well? While banks were over-owned, it's IT which is under-owned right now.
No, actually, IT has done fairly well as of now, despite all the problems that it's going through. In fact, I don't think the IT index has corrected at all from the year-to-date basis. Last I saw, it was outperforming the Nifty per se. So I don't think that's going to be an issue. But our feel is that, again, as I said, that frothy, and in fact, Nilesh also mentioned the same, that there are pockets of frothy valuations, and our belief is that IT is one of those pockets, because anyway, you may see the valuations at 25, 26 times forward earnings for all the large cap, but look at the mid caps and the small cap names. They're at 40 plus kind of valuations, which pre-COVID levels also weren't that much. I mean, they were in fact half those valuations per se. So our feel is that there should be some reaction coming into that pocket itself.
Would have thought that it's actually the Nifty PSU Bank which would be the largest contributor, and almost an 8% move there. And then, of course, there's Nifty Realty and Nifty Metals which have contributed to the rally from the August lows up until now. Having said that, Nilesh, do you feel that the construct of the market could change from here onwards? You know, what Anisha was just flagging off, that maybe IT and underperformer sectors like pharma could actually take the lead. Or do you think the baton is going to be held by PSUs?
I think there will be change of the baton. Some of it will be driven by events like when does US Fed pivot. If rate cuts happen earlier than expected, then the baton will shift from PSUs to maybe financial services, including PSU banks. If rate cuts are delayed, then maybe some of the defensives like pharma or FMCG will do well. We are also looking at monsoon deficiency. One will have to see what happens in September and how does inflation and rural recovery plays out. And then finally, we will also see impact of election cycle. Generally, we have seen ahead of election cycle, there is more money in the pockets of consumers, especially at the bottom end of pyramid, as government spends money. Now, this should benefit consumer staple or consumer goods company. So there are events from US Fed pivot to monsoon to election, and there will be certainly change in the baton. There will be sector rotation undoubtedly.
Yes, but Nilesh, tell me about when do we see that 21,000 or the 25,000 mark that Dinshaw was talking about? Likely to happen soon, or we'll have to wait a long while like we had to do for 20,000?
So as George Bernard Shaw once mentioned, it may happen in Jan, if not Feb, March, April, May, June, July, August, September, October, November, December. Just don't ask me the year, but it will happen in one of those months for sure.
Sure, it will happen in one of those months, but given that pre-election rally is what all of us are waiting by, probably it will happen sooner rather than later. And talking about that pre-election rally, Dinshaw, what's the take as far as industrials is concerned as well? L&T was sitting at record high level. There's this entire G20 push which has come for, the biofuel alliance as well. That means more work coming in for these, some of the industrials, biofuel equipment manufacturer as well. If I had to ask you top bet within that, what would be the pick?
Well, actually, you're right about the fact that the capex guys will be benefiting also going forward. Because, but one has to keep valuations in mind constantly here also. The fact is that the last three cycles of capex got deferred. Thanks to one was central elections of 14, came demon, and then came COVID. So that itself is getting clubbed together, and obviously consumption has picked up pace. So there has to be capexes which has to kick in. And that I believe is on the way in. I mean, if you heard all the commentary of all these companies that came out with the results for the June quarter, they're all talking about upping the capexes, guidances as such. So that obviously has kicked in a bit. But again, one has to be very careful here because already quite a few stocks have run up way beyond their valuation limits as such, according to us. And the name that you mentioned basically is in all kinds of capexes across, be it on roads or be it on ports or civil or commercial and stuff like that. So I think that's the best way to play it out. We have L&T in our portfolio and continue to hold.
Dinshaw, Nilesh, both of you, thank you so much for taking the time out and joining in the celebrations on D Street. 20,000, as unbelievable as it may seem like, but it's here on the Nifty. So Kunal, you thought